Good morning and welcome to NYSE Live. I'm Ashley Mastronardi. Stocks are fractionally higher this morning as investors monitor new developments across corporate earnings and economic data. More than 100 S&P 500 companies are reporting earnings this week, including NYSE-listed Pfizer and Eaton earlier this morning. Traders will also be keeping a close eye on NYSE-listed industry leaders Uber and Eli Lilly, both of whom report on Wednesday. Meanwhile, the Labor Department announced on Monday that Friday's January jobs report will be postponed. That's due to the partial government shutdown. This comes just months after the Bureau was forced to delay several reports this past fall due to the 43-day shutdown. That was the longest in U.S. history. However, investors will get their hands on some jobs data this Wednesday when ADP releases January private payrolls data. Here's what else is on tap this hour. Women's healthcare startup MIDI Health is looking to, quote, rewrite the story when it comes to women's health. It's just hit a major milestone as it aims to deliver on that mission, and its CEO will share the details. Meanwhile, NYSE-listed Smith & Nephew laid out its vision for its next phase of growth at the company's Capital Markets Day here in New York City. Its CEO joined me ahead of the event to discuss exactly what it wants to provide to customers. And at 9:30 Eastern, NYSE-listed tech giant Oracle will ring the opening bell. The firm is on hand to celebrate its Financial Services Summit being held right here at the NYSE. But we begin with the markets, as we always do here on NYSE Live. Joining me now is Shauna Smith. She's the SVP and Senior Investment Strategist at Global X ETFs. Shauna, welcome.
Ashley, thanks so much for having me.
So we're about 30 minutes away from the start of today's session. What are you going to be following most closely, Shauna?
I think it's all about earnings. You mentioned that this is such a key week for earnings here this week, and we think that that is really front and center. Taking a look at the results that we've gotten so far really show that earnings have been solid once again this quarter. We've got about a third of the S&P 500 companies that have reported. Taking a look at those beat rates, very impressive there. Taking a look at the magnitude of the earnings beats, we think that is very important to call out. Beating by an average of right around 9.1%. That's better than what we have seen historically, so we think that that will really add to some momentum. And it also just reaffirms the fact that the fundamental side of the story remains very strong here for the market.
All right, Apple and Amazon set to report later this week. We heard from 4 Mag 7 companies last week. What do you expect to hear?
So Amazon and Alphabet, it's going to be very key here. Once again, CapEx spending for AI has been front and center. We certainly saw that on display last week when we heard from Microsoft and Meta. And I call those two names out because they were both out after the bell on the same day. We saw a very different reaction in the markets. First, we saw a bit of a pressure here when we looked at Microsoft. On Meta, we saw a lot of excitement. So what does that necessarily mean for Amazon and for Alphabet here this week? We think there's going to be a huge focus on CapEx. When you take a look at the outperformance of Alphabet relative to many of the other Mag 7 names recently, I mean, the bar is very high. That is not new. That has been the story now for quite some time. So they will need to prove that the CapEx spending is well worth it. We talk a lot about the fact that 2026 is going to be a prove-it moment for AI. We think that is very much going to be a focus here over the next several days as we do get these earnings results. And then taking a look at Amazon, Amazon has been the leader when it comes to spending. So exactly that pressure from the street is going to be on that big name just to prove that their AI efforts are paying off and they're able to show that within the productivity numbers.
What do you think that the earnings from the Mag 7 companies we've heard from so far tell us about AI spending?
So it tells us that there's still a heck of a lot being spent on AI. But I think one of the things that we took from the earnings calls last week and what we expect to hear this week from the leaders of the rest of the Mag 7 companies is that that isn't going to change anytime soon. There's been some ebbs and flows, just whether or not we're going to see a bit of a pullback, what exactly that message is sending here to Wall Street. But time and time again, we know that the commitment to AI spending has remained very thorough. We haven't really seen a pullback across the board. We think when it comes to the AI story that actually the winners, the leaders that we're going to see here evolve a little bit. It's not just going to be the Mag 7 names that we are continuing to talk about. It's going to be beyond that. It's going to be names within energy. It's going to be the chip sector. We talk a lot about data centers, obviously the key role and the importance there that it plays within the whole AI ecosystem. So that's really going to be a focus for us here at Global X over the next 12 months.
And speaking of Global X, how is Global X ETFs helping clients navigate the tech sector?
We have a number of funds that really give our investors and clients exposure here to the AI story. I mentioned the fact that it has to be the entire AI ecosystem, that we're seeing this movement into the second phase, the third phase here of the AI investment story, and that's very much on display with a number of funds. We have AIQ, which is very much a broader-based exposure to the AI investment story. We have DTCR. I mentioned the importance of data centers there and the extreme build-out that we are expected to see here in the U.S. over the next several months and several years. So we think that there is a huge growth opportunity there to capitalize on that momentum. And then chip makers, beyond some of the big names, when you talk about some of the names that have been the leaders within the category, Broadcom, AMD, beyond that, Intel, we're going to see a bigger role of those names here over the coming quarters. We mentioned the fact that supply constraints obviously have been a huge story here to AI development. So as more and more players get involved, as they're able to scale their chips, we are going to expect and do expect to see wider adoption across the curve.
Are there any other sectors that you're looking at outside of tech that you think are interesting right now?
There's a lot that is interesting. And I think just going back to your first question there and talking about earnings and what we see in this earnings season, tech obviously has been an outperformer, but also communication services and industrials is right there. Palantir, we got those results out. And yes, that is a bit of a tech story, but we're having that exposure in Shield, and that is our defense tech play. So I think there is a lot of opportunity outside of tech. We certainly have seen a bit of a rotation when you look back over the last couple of months into a rotation into some of those underperforming names within the market. We think that that is healthy, of course, as we do see more and more names participate within that upside momentum. We do think in the long run that that is something that is encouraging here and really shows that we do have more room to run to the upside here over the next several months.
All right, and of course, it was a very busy week last week. We received that Fed decision, interest rates staying the same, and also President Trump nominated Kevin Warsh as Fed chair, and we understand you think it's a sigh of relief.
It is, it is a bit of a sigh of relief for the market. I think of everyone that President Trump had on his short list at the end was expected to be markets friendly. When you take a look at Warsh, there has been a lot of questions about his hawkish past and exactly what that means. Maybe that means that he isn't going to be as apt to cut rates. We don't necessarily think that that is the case. Of course, he's questioned a lot about the Fed's balance sheet. That doesn't necessarily rule out future rate cuts. So we think overall it's going to be very positive here for the markets and almost just reaffirms that investment story that we are seeing currently right now within the market.
All right. Any other storylines you're following? Anything under the radar you think might make a big splash in 2026?
The government shutdown. I mean, not necessarily having a huge impact on the market, but certainly something to watch. And I bring that up just in the context of the data, because we are getting a delay here for the jobs data. JOLTS was not released this morning. We're seeing a delay for the U.S. labor market data that we were expected to get at the end of the week. And I think that that is key just in terms of as we try to figure out what exactly the state of the economy is right now. Obviously, there's a huge focus on inflation. We have seen significant improvement there. There has been some weakness or stalling, obviously, within the labor market. So any further material weakness there could be an issue and could be a concern here for the market. So the fact that that report is getting a bit delayed, obviously something to keep an eye on, not something to really get too upset about or too worried about at this point, but certainly something to keep an eye on as this does drag out or could drag out for a little bit longer.
All right, Shauna Smith, SVP and Senior Investment Strategist at Global X ETFs. Thank you so much for joining us at the New York Stock Exchange and for your incredible insight.
Thanks so much for having me.
Coming up, MIDI Health reaches a milestone following fresh funding announced this morning. Its CEO joins us to share the details next.
As we stand on the cusp of America's 250th anniversary, we're reminded of the principles that have powered the world's greatest economy.
The New York Stock Exchange is a cathedral of the capital markets, replete with rhythms and rituals that allocate resources towards socially valued uses. That story will reach a rare milestone when our republic marks its 250th year. Anniversaries of this magnitude demand more than just ceremony. They ask something of us. They invite us to reflect, to ensure that the future that we shape will prove to be worthy of the legacy that we've inherited.
Welcome back to NYSE Live. Female-founded MIDI Health has officially joined the Unicorn Club. That's after a $100 million Series D funding round. MIDI is a telehealth platform for women's health conditions that offers insurance-covered care in all 50 states. Joining me now is Joanna Strober. She's the co-founder and CEO of MIDI Health. Joanna, welcome.
Thank you.
So congratulations on the funding round. How do you plan to allocate the capital to support the business?
So we're building a platform to support women's health nationally with all sorts of health concerns. So we started with perimenopause and menopause, then we added weight, now we're adding joint pain and anxiety and depression and really all the things that women are experiencing during their lifetimes. So we're using the money to both expand our technology platform and add more care concerns and then hire more providers.
And just to set the base layer, what service does MIDI Health provide and why did you start it?
So there's a huge care gap in the market for women's health. There are not enough trained providers, there's not enough research, and there's just really a lack of care in this country. So we started MIDI to solve that care gap. And essentially what we offer is insurance-covered care where you actually talk to someone. It's not AI, it is actually a real conversation with a trained expert in women's health to make sure that women get access to the highest quality health care.
And you mentioned that when this platform first launched, you were focusing on perimenopause and menopause, and it has evolved since then to cover more women's health concerns. Can you talk about that evolution and why you decided to expand?
Yes, so women started sending their daughters and their mothers. Seriously, they started saying, wow, you've taken care of me. Thank you for helping me take care of my night sweats and my sleep and my anxiety. My daughter has menstrual migraines. Can you help her with that? Or my daughter is moving from city to city and doesn't have a provider. Can you help her with birth control? And then actually the same thing with older women who are in their 80s and looking for vaginal estrogen or having UTI challenges. So we've expanded basically in response to the demand.
All right, and what has the customer response been?
It's very exciting. I mean, essentially part of why we're raising this money is that we just can't keep up with the demand. There's so many women who are looking for high quality care. When you look at our country, half the counties don't even have an OBGYN. We have a massive shortage of primary care doctors. We have a massive shortage of specialists. So essentially MIDI is able to fill this gap of care, of specialized expert women's health care. And there's a joke in the field of dreams, if you build it, they will come. Well, they are definitely coming. So we have a lot of demand, and it's exciting to have the capital to expand it.
And I understand that listening is a core value of MIDI Health. Why is listening so important in women's healthcare?
You know, I think there's been so much stress on efficiency, but women often don't feel heard with regard to their healthcare challenges. They feel like doctors ignore them, they don't take their concerns seriously. And so a lot of what MIDI does is train really good listeners. We train people to listen carefully to your concerns and then make sure that we're giving you the right targeted interventions to help you feel better.
All right, and why do you think that that's important? And how do, what's the feedback you get about that listening value?
You know, honestly, in the age of AI, and we're using a lot of AI in our system, but in the age of AI, I would say actually people don't feel heard even more. They feel like there's not enough people who listen to them, take their concerns seriously, and take their personal health history into consideration. And so what we're finding is by offering real conversations with real people, that is a real value to women.
And you mentioned using AI in your platform. What are the use cases for AI on the Midi Health platform?
So essentially, we're building a health system without walls, right? We have over 500 providers at this point all throughout the country. We're building a health system without walls. That means you use AI in every part of the system, using it for billing, using it for prior authorization, using it for chart review. We're using it for every part of the platform that we've built to enable a scalable platform. But importantly, we're not using it to actually provide the care. We have providers to actually do the care, but AI is supporting the rest of the journey to make it really high quality and efficient.
And how has Midi's care model impacted women's health outcomes?
So we're collecting data. It's actually really exciting. So we've had over 250,000 women as patients, and we see their data, their longitudinal data and their outcomes. So we're able to much better tailor the care to them based on the outcomes that we're seeing. Historically, there's never been a place with so much data where you can look at one drug versus another drug versus another drug. Each drug company does their own study, but we have a platform across all of them. So we're able to really get a good understanding of which women should be on SSRIs, which women should be on hormones. What happens if the people are using vaginal estrogen? What happens if they're using new medications that are coming out for menopause? And then we can compare those outcomes to previous outcomes and really prove that we're getting better women's health outcomes.
And why do you think it's so important to be so on top of data?
Data is key here. There's been such a lack of research in women's health. So I think historically, women have really been given the wrong care. There hasn't been enough information to understand what the right care is. So historically, women have just not gotten access to the right medications, the right supplements, the right lifestyle changes. But with the data that we're collecting, we can actually prove that things work and make sure that women get access to the right solutions.
All right, Joanna Strober, co-founder and CEO of Midi Health. Thank you for joining us at the New York Stock Exchange, and congratulations.
Thank you.
Coming up, we're going to stay on the topic of healthcare as one NYSE-listed firm recently revealed the next step in its growth journey during its Capital Markets Day here at the New York Stock Exchange. We're going to have those details next.
The New York Stock Exchange is a cathedral of the capital markets. So there are a few places more fitting to consider the future of the American financial system than this one.
At the NYSE, we applaud SEC Chairman Atkins and the entire Trump administration for working to reduce the burdens on existing public companies and soon-to-be public companies.
I believe that we will ensure that the American story, which began in many ways just steps outside, is preserved not by memory or speeches alone, but by the courage of those who are determined to chart its next chapter.
When we talk about the titans of industry and we talk about the titans of finance, there's a reason that we're all coming together still after all these years to the corner of Wall and Broad Street.
We are ringing the opening bell this morning to celebrate the launch of 6 new ETFs by direction.
We look forward to many more. I mean, today's 6, we're going to do hundreds more.
The New York Stock Exchange, the home of ETFs.
Welcome back to NYSE Live. NYSE listed Smith & Nephew is developing medical devices that it says will restore patients' bodies and their self-belief. I had the opportunity to sit down with CEO Deepak Nath ahead of the event, who shared more details about the work the firm is doing. You can take a listen.
Smith & Nephew is a 170-year-old medical technology company. We were founded in the north of England in 1856. We started in wound care with basically bandages, and we've grown since then to be a global company. We operate in 70 countries, and we are in orthopedics, we're in sports medicine, we're in wound care, and ENT.
So unpack that for us. What are you providing and who are your customers?
So our customers are hospital systems all around the world, and there are surgeons and there are other nurses and doctors and so on in these health systems. And what we provide are equipment that surgeons use in surgeries. So we make, for example, in orthopedics, artificial knees and artificial hips and shoulders, and surgeons place them in patients that are in need of these types of devices. And we also make bandages. We make biologically derived materials. And so we've got a whole portfolio of products fundamentally aimed at making patients better and enabling them to lead a life unlimited, which is our sense of purpose.
And the technology I mentioned at the top of the interview, Tessa, Corey, and Pico, medical technology that you've developed. You're going to be sharing more about it and highlighting it at your 2025 Capital Markets Day. There was one in London. This one is in New York at the NYSE. Can you talk more about that technology and what else you'll be covering at that event?
Sure. At Smith & Nephew, over 170 years, we're proud to have pioneered some new technologies that have defined the standard of care, highly disruptive technologies that have brought about new innovations to actually help patients live better lives. And three of the examples are ones that you highlighted, Pico, Corey, and Tessa, and they're in each part of our business. And there are many more, but there's three that we are highlighting. So Tessa is a brand new way of doing minimally invasive surgery to repair tendons and ligaments. It's called spatial surgery. There's nothing like it in the world today. And what that helps surgeons do is plan their surgeries better and execute better so that patients have better outcomes. So think of it as Google Maps for surgeons, right? So they're in a knee, for example, and they want to know where they are and where they want to go to be able to fix whatever it is that's broken. And Tessa enables surgeons to do that, to navigate their way within a patient's body. That's Tessa. The second is Corey. Corey is our robotic platform that enables orthopedic surgeons to optimize how they put in knees or hips or shoulder. So it enables surgeons to plan out their surgeries, execute to that plan, and when they do that, they minimize the variability that they encounter from patient to patient. And when they do that, actually patients ultimately benefit when having better outcomes. So that's a surgical robot for our orthopedic systems. And Pico is something that we pioneered. We were the first to bring to market a single-use negative pressure therapy. So when you have large wounds, either post-surgical wounds, other hard-to-heal kind of wounds, these type of wounds benefit from having essentially a vacuum, a negative pressure around the wound. And what that does is inhibit infections from forming at the wound site, and actually ultimately enables the wounds to heal faster. And so what we did was pioneered a way to take this negative pressure therapy and bring it into a home or non-hospital based setting. And so this has been on the market for about 10 years now, and it's done a phenomenal kind of contribution to patient care. And we're looking forward to growing that as we take that to even more markets around the world.
And I understand part of this Investor Day, you're also planning to discuss your strategy and financial targets moving forward. Can you share more about that?
Yeah, we're really excited to unveil a new strategy for the next 3 years. We call it RISE, and it's an ambitious but achievable strategy that elevates Smith & Nephew to levels that we've never seen before. And what it's done, it's built on a transformation that we've undertaken of the company over the last 3 years, where we've addressed some of the issues that have held us back, driven productivity right across the company, and actually accelerated growth in our businesses that have been strong or well positioned to begin with. So the combination of which is we're a company that's firing on all cylinders. We're a much stronger culture, much sharper in our execution and greater rigor in kind of how we do things. So that as we start this new chapter called Rise, we've got a great set of tailwinds that are propelling us. And what we're expecting to deliver is top line growth that's over and beyond what we've been able to deliver so far. So under the transformation program, we went from being a single-digit growth company to a mid-single-digit growth company. And under Rise, we expect to deliver 6 to 7% growth, so further accelerate growth. In addition, we expect to grow profit more than our revenue. We expect to grow our profits 9 to 10%. And we expect to dramatically step up our free cash flow generation. We started in 2022 generating $56 million of free cash flow. And this year, we've guided the market that we would deliver $800 million in cash flow. And by 2028, at the end of the next 3-year chapter, we expect to deliver $1 billion in free cash flow. And at the same time, we expect to improve our return on capital from about 9% this year to 12 to 13% by 2028. So you put these elements together, what we are shooting for is a company that's going to accelerate growth, drive further profit growth and margin expansion to go with it, and actually generate significant free cash flow. And we would expect to do is take some of that free cash flow that would give us optionality to further scale our businesses where we're already strong. And so that's M&A, strategic M&A, that we hope to undertake in this next 3 years.
Thanks, Smith & Nephew CEO Deepak Nath for that interview. Don't go anywhere. Oracle will ring the opening bell. That's up next.
"16 years ago, an anonymous person released an idea onto the internet. No identity, no institution behind it, no marketing strategy. It was just a white paper and a challenge to everything we thought about money. What if money were open instead of closed? What if it belonged to everyone instead of being controlled by a few? Bitcoin survived every attempt to kill it, because the idea itself was stronger than the forces that tried to stop it. And now, today, inside one of the most iconic institutions in the world of finance, we honor a creator who never asked for credit, never stood in front of cameras, and ultimately stepped away so that the idea could stand on its own. Satoshi Nakamoto."
Why are we here? Because Magnum Ice Cream Company is an ambitious company. We're all about growth. And for growth, you need people and you need to have belief that focus on only ice cream will propel this business. These folks here in the room wake up every morning thinking about ice cream, and they go to bed thinking about ice cream. And that's why it will be a successful company that delights the world with unbelievable products.
Welcome back to NYSE Live. In just a moment, NYSE-listed tech giant Oracle will ring the opening bell. The company is on hand for its annual Financial Services Summit, taking place today here at the New York Stock Exchange. Oracle says the event, which explores how artificial intelligence, embedded finance, and tokenization are reshaping the financial services industry. Executives from Oracle, along with industry experts, will discuss the latest innovations and strategies driving the sector. Additionally, Oracle Financial Services says it's serving more than 10% of the world's banked population across more than 160 countries. Let's go to that bell podium. Doing the honors is Sovan Shatpathy. He's the SVP of Product Management at Oracle Financial Services. An exciting morning for Oracle as they celebrate the Oracle Financial Services Summit that's going to take place today here at the New York Stock Exchange. And markets are officially open for trade. Joining me now is Eric Criscolo. He is the market strategist for the New York Stock Exchange. Eric, welcome.
Thanks, Ashley. Great to be here.
Great to have you back. So the session just kicked off. What are you going to be looking at most closely today?
Yeah, well, obviously earnings season is still continuing, so we're still getting the flood of earnings coming through. Some of the bigger healthcare names are reporting right now, so that's going to put focus on that sector. But, you know, to be honest, there's also still a lot going on in the commodity sector. Metals, you know, gold and silver especially, showing just extreme volatility. So we're kind of keeping an eye on that as well.
What are some of the themes that are coming out of this earnings, Q4 earnings season?
I think the results are generally, you know, they're positive across the board. You know, so companies are generally beating estimates. The one thing we're seeing, though, is that companies aren't getting as rewarded or even rewarded at all for beating estimates. And companies that miss estimates are getting punished a lot more than they used to, historically speaking. So, you know, that's kind of a dynamic of, you know, expectations have gotten really high, and also, you know, the valuations and the price levels have gotten really high. So any type of even slowing momentum is kind of getting a knee-jerk sell-off in that particular name.
All right, and yesterday the BLS said that the January jobs report is not going to come out on Friday due to the partial government shutdown. How are traders gauging the economy given the recent delays in jobs data?
Yeah, I think we're still trying to get over the last delay, right? So that's, you know, now we have another delay to get over. So we'll see when these reports actually come out. I know Congress is voting on it today, hopefully to reopen everything. But, you know, traders are now accustomed to these things. The reports have been messy. The economic data has been messy, you know, coming out of that shutdown. Things were finally normalizing. But in general, you know, the economy, the prints have been solid. The latest yesterday was the ISM manufacturing index, printed a pretty good number. So, you know, on the headline numbers, the economy seems to be doing particularly well.
All right, and the ADP is going to be releasing private payrolls data Wednesday. Do you think people are going to be taking a close look at that?
Yeah, I think so. I mean, the payrolls data, labor data, always a big focus for the markets in general, especially now as you have potentially a new Fed chairman coming in, who still has to go through the nomination process. But, you know, he's historically, as you know, his one of his planks was he wanted to lower short-term interest rates cutting. So, you know, how that whole Fed dynamic plays out now, definitely going to be something that markets are going to be paying attention to.
What is your take on Kevin Warsh?
I am not an economist, so I just want to put that out there right now. But, you know, it seems that, you know, again, he's previously talked about two things: cutting interest rates on the short end, getting them as low as possible, but also shrinking the size of the Fed balance sheet. And so those two things kind of are diametrically opposed in some points, as far as loosening and tightening financial conditions. So, you know, how that plays out from, if they do cut short-term rates, like Trump has been banging the table on, if they do that, a lot of times that could maybe pressure long-end rates to go higher, which is something that the economy might not want to do. And then shrinking the balance sheet, of course, that plays into the whole, you know, buying and selling pressure of treasuries, which will kind of, you know, percolate down to basically everything else in the economy. So it's really kind of we don't really know quite yet what's going to be happening here. And of course, he still has to wrangle with 12 other FOMC members, right? So it's not just him voting; it's everyone voting together, and then they doing what the vote comes out as. So a lot of dynamics to play out still, but it should be interesting to see how that whole narrative evolves.
All right, and the S&P 500 hit 7,000 last week. Do you think we're going to continue to go in that direction? What's your take for the S&P long term?
I think there's certainly possibilities, absolutely, that good arguments, I should say, where the S&P could go higher. But we are starting to see, a divergence in some of the sectors that were leading last year. Mega cap tech, those are kind of slowing down now. Other sectors like the Russell 2000, the smaller caps, they're kind of playing catch up. They're doing pretty well in the first parts of the year. You need a lot more of those smaller names to do a lot better to make up for the fact that the top 7, 10, 100 names, if they flatline. So it's going to be harder for the gains to come by. I'm not saying we don't get it, but I just think the bar, again, as we're seeing with earnings, it's been raised a lot. So pushing into the higher levels for the S&P 500, it's going to be a little more difficult maybe than last year.
All right, is there anything under the radar you're following you think we might be hearing about in 2026?
I think, if this is not under the radar, but just the dynamics in the crypto market, really interesting. It's kind of falling off a lot right now, well off the highs. 120,000 Bitcoin was at several months ago. Now it's about 80,000. So that's a big risk asset. So it's a big sentiment asset. Things are going great. Everyone wants to buy crypto. Yay. That's really collapsing now. So how that market plays into the other markets, where that money, if it comes out of that market, well, where does it go into? Does it get really conservative and go into, overnight, money market rates, which I doubt, but, or does it go into some of the more speculative stock, areas like, space companies or data center providers or things like that, AI companies. So where that kind of speculative flow moves, really kind of interesting to track.
All right, Eric Criscolo, market strategist for the New York Stock Exchange. Thank you so much for joining us.
Pleasure to be here. Thank you.
Still to come, autonomous truck manufacturer Gatik says it's the first U.S. company with driverless truck operations, and it just steered itself to a new revenue milestone. Its CEO is going to tell us more. Meanwhile, Italian-based Uno Bravo says it's setting a new standard when it comes to providing quality mental health solutions. Its chief executive is going to explain what sets the firm apart. Plus, MUFG recently celebrated its 20th anniversary right here at the New York Stock Exchange. You'll want to hear what the company's U.S. CFO told me about how the financial firm is positioning itself for long-term success. Stick around.
I'm just so honored and so grateful to you, Lynn, for welcoming us to announce our Time Person of the Year, the architects of AI. I want to take a moment to welcome Chris Lehane. You have been an incredible driving force, making AI accessible to everyone, and we are so glad that you are here with us today. We are focusing on the leaders and the people and the humans that are imagining and building this future that we will all be living in.
We had somebody ask us recently, why are you going out at this time of the year? The reason we're doing this is for our people. It's not about us. Our motivation for doing this transaction is to make this a better place for the next generation. We have a stewardship responsibility to our people to give them a professional and a financial opportunity that's better than what we have. And what I am very proud of is the team that we have here. This is a true partnership in every sense of the word.
Welcome back to NYSE Live. It sounds like science fiction, but driverless trucks have hit the road. Gatik says it's the first U.S. company to deploy fully driverless trucks in real-world commercial operations, running daily deliveries without a human driver. Joining me now is Gautam Narang. He is the CEO and co-founder of Gatik. Gautam, welcome.
Ashley, thank you so much for having me. Excited to be here.
So what separates Gatik's driverless freight operations from earlier pilots or iterations?
So I'll start by saying this, that Gatik is in the business of autonomous freight. Today, we provide daily revenue-generating commercial service across multiple US markets. And our trucks are operating fully driverless, meaning no safety driver, no observer on board on public roads. While others are still in simulation, we are in supply chain, moving goods for some of the largest companies in North America. And there are multiple markets that we're doing operations today, many more to come in the coming months. And that we have over 600 million in contracted revenue from CPG players, retailers, grocers that are eager to adopt our solution across their supply chain.
All right, and do you know what people's reactions are when they see a driverless truck on the road?
Well, it's a daily reality, right? It gets very normal very quickly. Gatik has experience operating trucks in Texas, Arkansas, Arizona. Today, we have 10 fully driverless trucks on public roads. Very soon, we'll have 60 in the coming weeks. And then by the end of this year, we expect to have hundreds of fully driverless trucks. So it's a part of new reality and daily reality for people.
And what does operating at commercial scale look like in real-world freight operations?
So it means our trucks are operating daily, day and night on public roads. So we cover highway driving and surface streets, and we are integrating our solution across our customer supply chain. So moving goods from warehouses to retailers and stores that are close to you. And on a daily basis, the trip can be up to 400 miles. We do 4 or 5 stops. We can add, skip, or reorder stops based on the order volume for that particular day. And the fact that we already have fully driverless trucks, many more to come in the coming weeks, it proves that it's part of the core infrastructure, not experimentation anymore.
All right, and why are customers now committing to autonomous freight for ongoing deliveries?
It does come down to 3 things: reliability, economics, and capacity, right? So with reliability, we are providing a very consistent, predictable service on a daily basis. Economics, when our autonomy solution becomes core part of the infrastructure, the ROI is very clear. In terms of capacity, actually the freight volume is expected to increase by 50% by 2050. So we are coming in as a way to augment the capacity for the retailers that are under strain and also basically helping them move goods faster and more frequently. And the fact that our customers have made hundreds of millions of dollars of multi-year commitments proves that this is really part of the core infrastructure and it's not optional anymore. It's essential for their infrastructure.
All right, thank you, Gautam Narang, CEO and co-founder of Gatik.
Thank you so much.
In other news, Endeavor Week in New York City brought together entrepreneurs shaping the future around the world. Several of these leaders were recently at the New York Stock Exchange. That includes Uno Bravo founder and CEO Danila Di Stefano, who told me how her firm is standing out in the mental health space. Check it out.
Basically, we are one of the first companies in Europe that made therapy fully online. So the users that are looking for to start their therapy, they come to Uno Bravo and they fill out a questionnaire where we basically collect all the information related on the clinical aspects, so what they want to look on. For example, I want to solve an issue like I feel anxious or I don't live my life well for a certain symptoms, or even there are dynamics in my relationship with my partner that doesn't make me live well, or anything else that you want to improve in your life. So you select it and you add your considerations on our questionnaire. And basically our matching algorithm that is based on AI technology matches with one of the therapists that is the most suitable for all the needs that were expressed in the questionnaire. Once done, they start their therapy journey with the therapist, and hopefully they will find the right feeling with the therapist, and they will continue the journey on our platform. Something else I really want to say is that we really take care also of the selection of those therapists. So, for instance, a therapist cannot just subscribe to Uno Bravo. We select one by one our therapists, because our goal is not just to make therapy accessible, but also to provide high quality service.
What is the perception of mental health care in Europe?
Interesting question. You can expect that Europe is very fragmented, so the answer is different country by country. What we noticed is that in Southern Europe there is still a lot of stigma surrounding mental health care. This is also valid for Northern Europe, but also the US, honestly. Stigma is everywhere, because for a long time vulnerability was not accepted as something to consider in people, because we always wanted to see people strong enough to deal and handle into every situation you can face. So on the other side, the vulnerability, and so therefore mental health care, could not be acceptable, because it means that you show up yourself as fragile. But this is absolutely impossible, because every person during the course of the life can experience struggles, can experience symptoms or problems. So this is something that for Uno Bravo is very important to normalize. From when we started, we try to fight this stigma. There are other countries that are more used to therapy, so it's more normalized already, and that's great, because it means that people will take care of their mental health if it's needed. Because stigma, what the stigma does is that basically avoids you to take care of your mental health when it's needed. Because if you want to force yourself in fight on your own, basically it means you're not really taking care of yourself. That's a big problem.
What has the customer feedback been?
So far, very good, I have to say, because the results that we could achieve, all the numbers that I already mentioned, were possible only because users, even initially, even when the technology was very basic, were very surprised about the quality that they were able to get out of our service. I think one of the reasons is the fact that I wasn't born as an entrepreneur. Actually, I'm a psychologist. So everything that I have done from the very day one in Uno Bravo was about understanding how to scale clinical quality. That's the hardest thing to do, actually. The hardest thing is not building technology. Many people build technology. The hard thing is to replicate at scale an high-quality service. And in our case, of course, I'm talking about the clinical service that we provide. Considering I'm a therapist myself, I'm obsessed with all the clinical aspects. So that's why the feedback were so good, and this is visible in our external feedbacks that you can find on the various platforms for reviews on internet, but also with our numbers, because actually Uno Bravo right now is the platform that have the highest retention globally. And it doesn't mean that the therapist list forever, so the patient is attached forever to the therapist. It means that very few people abandon the therapy because they are not satisfied with the therapist that we select and that we match with our users.
And I understand you said that you have 900,000 mental health care providers. How do you work to ensure quality with that many providers?
Basically, it starts with the selection, okay? Considering that we have a team that is around 10 people now that every day only do selection of our therapists. So basically it's like looking at a company culture that also includes all the contractors that in our case are the therapists. And when we select the therapists, we don't just look at the skill set, years of experience and everything you can imagine that is part of a hiring process. But we also look at the human aspects of the therapists. So the empathy that they have, how they welcome a patient, if they are sensible enough So it's not just a matter of skill set. And that's why for people it's very important to feel not judged when they do therapy. This is something that sometimes is given for granted. Unfortunately, it's not for granted, and we take care a lot on this aspect. Then after that, so once the therapist starts to work at Uno Bravo, they immediately find many webinars, courses, many things to empower themselves. So we also take care of these other parts of the journey from both the therapist and the patient side. This is an enormous amount of work, but it's very worth it because we can basically involuntarily created communities of therapists that are super excited to work at Uno Bravo because they both get to work, but also education, training, and empowerment to become even better therapists.
Thanks, Danila DiStefano, for that interview. Coming up, MUFG recently celebrated an anniversary right here at the New York Stock Exchange. Hear why one of its executives says the firm is set up for long-term success next.
I know 100 years isn't much in the New York Stock Exchange laurels, but we're very proud. First U.S. airline to reach 100. The resilience and the determination to move forward despite all odds is something that I think we're all proud of. We've had a great opportunity to celebrate this year. The power of obsessing on our customers is what makes Delta really great. And my superpower, I'd like to think, is obsessing on them, on these people, so that they can go do the job. And it's not just me, it's our leadership team in terms of making it happen.
It's a bit of a pinch me moment. I mean, everyone's here. Here we just rung the New York Stock Exchange bell. In a lot of ways, it's a dream come true. When you walk around the NYSE floor, it's just emblematic of the American dream. Look, if I can do it, others can do it too. So believe in yourself, work hard, be the best you can be every day, and it compounds.
A plan to go and change the way people fly, it is the next step. When we look back at what we promised to go do and then we go do it, it'll be the foundation of our business that builds us to the next step. And it's because of the people here and what you all did, which was enabling greatness.
Welcome back to NYSE Live. This past fall, NYSE-listed financial firm Mitsubishi UFJ Financial Group, better known as MUFG, rang the closing bell to celebrate its 20th anniversary of founding. Before the firm rang the bell, I had the opportunity to sit down with U.S. CFO Mark Thumpser to discuss the work MUFG is doing and how it's positioning itself for long-term success. Take a listen.
MUFG is one of the 10 largest banks in the world. We're about $3 trillion in assets globally. We do business in over 50 countries. Importantly, in the United States, we've been a part of the economy for over 145 years. We have $250 billion of assets here. We have many industry verticals. And most importantly, we're very proud of our project finance business, which has been #1 in the league tables every consecutive year since 2009.
The fact that you've been around for 145 years, what do you think that means to customers?
Customers value our strength and stability, first and foremost. And if you go back in time to the great financial crisis back in 2009, we were here with a check for $9 billion to invest in Morgan Stanley during the depth of the financial crisis. We still have that position today. We're very proud of the partnership we have with them. So being here for the long haul is what we're all about. We play the long game. We're all about client first, and we're very proud of that heritage.
As I mentioned, there was a merger 20 years ago between Mitsubishi Tokyo Financial and UFJ Holdings, now MUFG. Can you tell us about the significance of that and how you're going to celebrate it here today at the New York Stock Exchange?
Sure. Like many of the largest global banks, we've been put together through the years through a series of mergers. Most recent one of those of a significant size was Mitsubishi Tokyo combining with UFJ Holdings and coming together to form MUFG. We're here to celebrate that, ringing the bell this afternoon, and we're very excited about our 20-year history and many more years to come.
So you've served as CFO of MUFG Americas since 2022. Can you tell me more about your role?
I started in the corporate investment banking business as a CFO there, and then I moved up to our executive committee for the Americas as the head of strategy. When we sold Union Bank to US Bank in 2023, I moved into the CFO and CSO role combined. So I'm responsible for budgeting, forecasting, corporate development, and many other activities in the United States.
And MUFG is a Japanese bank, but I understand that your investments are helping and have been helping the U.S. economy. Can you share more about that?
Yes, we're here to support the U.S. in our large industries in technology, media, healthcare, financial services, industrials. I mentioned our project finance business. We're doing a lot of activity in the infrastructure, both traditional infrastructure and our data infrastructure, supporting our clients as they build out what's going to be a transformative platform for the United States going forward. We do business in 49 of the 50 states. We're working on Alaska. Just in Texas alone, we have $36 billion of exposure on our balance sheet. And there's 29 other states where we have at least $1 billion invested in the state economy.
What feedback have you been receiving from clients with all of this work that you're doing?
Clients want to hear a trusted advisor who has deep domain expertise, both in their industry and even more specifically in their own company, that really digs in and knows their balance sheet, their esoteric assets, and brings ideas to them. And that's how we go to market. We cover clients specifically in those industries, started with the large cap, and increasingly we're building out a middle market presence inside those industry verticals. And that's what's valued about our advice.
What are MUFG's priorities for the rest of the year and beyond?
Continue building the middle market capability for sure. We have brought in people and talent for the past several years in specific industries. Our growth in emerging tech business would be one, our supply chain for business, our entertainment, finance, and other businesses as well. Looking ahead beyond that, we want to continue to drive our distribution capabilities around the world. That's a differentiator for us. As you look at the size of the deals that are getting underwritten, there's more and more need to diversify the distribution into the international markets and beyond the traditional bank market into asset managers and alternative asset managers. So we're excited about that. Internally, we're always looking for continuous improvement opportunities. We've rolled out Microsoft Copilot in scale. We're experimenting with use cases and other AI technologies. And then we're very excited about our future here and supporting the United States over the next 20 years to come.
Thanks, MUFG U.S. CFO Mark Thumser, for that interview. Before we go, let's take one last look at the markets. The Dow up about 0.25%. The S&P is flat right now. And this morning, NYSE listed Disney announced that Josh D'Amaro, chairman of Disney Experiences, will be its next CEO, succeeding Bob Iger. That's effective March 18th. Iger will serve as a senior advisor and Disney board member until he retires from the company on December 31st. A lot going on in the markets this week. We have a lot of earnings coming up. Stay tuned daily here at 9 a.m. for more of that info.
Welcome to the public market.
The New York Stock Exchange is a cathedral of the capital markets. So there are a few places more fitting to consider the future of American financial system than this one.
So thrilled for this next chapter to begin today with all of you in this historic building.
The day we went public, it was the most bizarre day of my life. He said, yesterday, Shake Shack was the most beloved hamburger company in the entire country. Today, it's going to be the most reviled stock. He said, you guys are never going to grow into your $46 valuation. How many Shacks did we have 10 years ago? 31 Shacks. And did I not just hear Rob say that we're going to have 1,500 Shacks? So yes, we grew into that $46. It's all because of you guys. I'm so proud of you, every one of you. You work so hard to make so many people happy, and you make your communities better. What more could you ask for?